1.9 trillion reasons to invest in Bitcoin. Hey guys, what's going on? Jeb here, and in today's video, we have some very important news to cover, some very important fundamental analysis on Bitcoin to do, because as you guys probably know, there is an incoming administration, and that incoming administration has a plan. That plan involves trillions more dollars worth of government spending and is likely going to lead to massive amounts of money printing of the US dollar. This inflation is almost certainly going to lead to investors flocking to Bitcoin as an inflationary hedge. And in this video, we're going to be discussing why I personally believe it might be leading Bitcoin all the way up to $100,000 in the next 18 months. We have a lot to cover in today's video. You're going to get a lot of great value out of today's video. Make sure to follow us on Instagram and Twitter at CryptoJeb. You can find me active over there. But without much further ado, guys, let's go ahead and dive right on into it. Biden's $1.9 trillion relief package proposal fails to stir the Bitcoin market. The U.S. president-elect just proposed an emergency relief package worth $1.9 trillion. The lack of bullish response by the Bitcoin market is perhaps surprising, given that fiscal and monetary stimulus is inflationary, that's the key word, and Bitcoin is widely considered a safe store of value. Public listed companies such as MicroStrategy have bought Bitcoin in the second half of 2020 to preserve their value of their treasury and to avoid inflation. This is likely going to be another bill like the CARES Act that we saw passed last year and is almost certainly going to result in trillions of dollars being injected into the U.S. economy. When that happens, the value of every single individual U.S. dollar goes down because the number of dollars in circulation is going up. Think about it like this. If there are exactly $100 in existence, each of your dollars is 1/100th of the total supply. But if all of a sudden your little town's economy doesn't grow, you're not producing any more resources, the value of your economy is staying the same, but the number of dollars in circulation doubles to 200, every single one of your bills is worth 1/200th of the total, but there hasn't been any value increased, so you just lost money to whoever got the 100 new dollars. What $1 used to represent, now $2 it takes to represent. The exact same thing is happening on a national level when the government prints money, even if that government printing is justified. Even if you agree that we need stimulus to help support the economy right now in these hard times, it is beside the point. The fact is, new U.S. dollars are being injected into the economy. That is going to cause inflation of the U.S. dollar eventually. I'm not going to get into all the macroeconomics right now. It does take time. There are a lot of explanations and reasons for why that takes time. We haven't seen the full effects of it happen yet, but it will happen. And when that happens, everyone holding their money in the U.S. dollar is going to suffer. That's why more than half of my cash reserves are actually in cryptocurrency assets right now, not U.S. dollars. So what does this mean for Bitcoin? Why is this even important? Well, it's important because this rally that we're seeing on Bitcoin, with Bitcoin trading above $30,000, is built not only on hype, it's built on fundamentals. Bitcoin has grown as an industry amazingly over the last 3 years, ever since we rallied to $20,000. Ethereum has grown even more, and the regulatory clarity around cryptocurrency is much, much more transparent than ever before. We're about to talk about that in another news story coming from Jerome Powell, the chair of the Fed. But the point is, Bitcoin's rally right now is built on strong fundamentals. The number one fundamental that Bitcoin in general is built on is the fundamental of scarcity. Bitcoin is scarce. There's only 18.5, almost 19 million in existence, and there will only ever be 21 million. In fact, we won't even ever get that far because, according to a recent release, something like 500,000 Bitcoin or more have been lost permanently from lost passwords. Make sure you don't forget your passwords, guys. But Bitcoin is a scarce asset. Unlike the US dollar, you can't print more Bitcoin. So what that means is that when the US dollar is getting printed and people are losing their value in the US dollar, smart money, like an attorney I know, she might be watching this video, hi, put their money in Bitcoin and cryptocurrency because it is an inflationary hedge. So let's expand on that point. I want to quote Jerome Powell real quickly. If you don't know who Jerome Powell is, he is the chairman of the Fed, the Federal Reserve. He stated that the Fed is investing heavily in understanding the technology, that being Bitcoin and blockchain, and looking at the policy questions CBDCs pose. Let's back up. What's a CBDC? If you read that as CBD the first time, don't feel bad because I did too. I thought we were talking about Jerome Powell like getting blazed or something, but a CBDC is a central bank digital currency, and even this article trips over what the shorthand of that is supposed to be, so don't feel too bad. Jerome Powell on CBDCs. We don't feel a need to be first. The U.S. is going slow on central bank digital currency. See, even CoinDesk messed up. That's supposed to be CBDC. Considering the risks that they pose to the dollar's dominance, the chairman of the U.S. Federal Reserve said Thursday. So what this means is that the Federal Reserve is about to have to get ready for even more money printing, even more economic stimulus, even more strain on the U.S. dollar that it is already losing control of. But the Fed is also starting to learn about digital currencies. This is good news for us. I'll tell you why this is good news. It's good news because the more they understand these currencies, the more they will realize that they are unstoppable and they don't have a chance, and they should get on the hype train. I'm serious. I'm saying that in a funny way. I'm saying that in a menacing way, but I'm serious. That's what they're going to realize, is that they can't do anything about the US dollar. And the faster they realize that, the faster that they will start legislating and regulating in a way that is pursuant to that understanding. Speaking at an online event hosted by Princeton University in New Jersey, Jerome Powell said, "We don't feel an urge or need to be first on CBDCs." Effectively, Powell continued, "We already have a first mover advantage because the US dollar is the reserve currency." Powell estimated it will take years rather than months before the Fed releases a CBDC, despite early studies of digital dollar-friendly blockchains at the central bank's Boston outpost. So what we're seeing is that increased economic stimulus is coming to the market, and that increased economic stimulus is going to almost certainly result in gains for Bitcoin because the US dollar is being printed so heavily. But on top of that, we also have news that the Fed is becoming very interested in digital currencies. Guys, I cannot stress enough how much things have changed in the last 3 years. When I got into the market on July 31st, 2017, news stories like this were unheard of. You did not see Jerome Powell coming out talking about cryptocurrency every other day. You did not see massive institutions and organizations talking about Bitcoin and cryptocurrencies. It was still a very niche thing. It was still very Wild West-esque, and it still is, but we're a lot more mature now than we were just 3 years ago. Think about for a second how fast the world moves nowadays. And now contrast that to how people lived 500 years ago. 500 years ago, your great-great-great-great-great-great-grandfather lived the exact same peasant life you did. And nowadays, 3 years seems like a long time to us. 3 years is nothing. Where were you 3 years ago? I know where I was 3 years ago. I was in 12th grade. I was a senior. Dual enrolled in college. Wow, feels like a lot longer. But anyway, my point is that 3 years is not that long. In 3 years, we have come this far. Imagine what the next 3, 5, 10, 20, 30 are going to bring. And don't miss out on the opportunity to get in on something at the ground floor like this. We're not in the everybody adopting phase, guys. We're still at the early adopter phase of that chart. Have confidence in your investments in Bitcoin. Have confidence in the fact that Bitcoin is going global and a lot of people are opening up to it and the market is growing. Anyway, guys, that is going to wrap it out for today's video. Before I go, though, I do just first want to mention the exchange that I recommend, and that would be Bybit. If you're looking to sign up for an exchange, I would encourage you to use Bybit because Bybit is one of the simplest, easiest exchanges to use. They have very, very low downtime. You don't see a bunch of random crap in the market with the markets jumping a ton because of low liquidity. There's plenty of liquidity on Bybit. Everything you want out of an exchange you're going to get from them. Simple user interface and everything. If you sign up with our link down below in our pinned comment, then you'll be helping to support this channel, and I'd be very appreciative if you did that. A lot of the expansion that we are doing right now is being funded by the course and by Bybit and our other affiliates, so I'm very thankful for our affiliates, and I'm very thankful for everyone going through CT2A. Thank you guys so much. We have some big things going on behind the scenes. Some things that you're going to see like in the next couple of weeks, kind of big. But we also have some big things that are coming 3, 6, 12 months down the pipeline. Guys, it's going to be crazy. The year from now, oh man, so many things are coming. I can't wait to show you guys, but you're just going to have to wait and see. But one of them's coming pretty soon, so get hyped. There's something awesome coming. Anyway, guys, that is going to wrap it out for today's video. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.